Public.com presents The Rundown, your daily market update in under 10 minutes. My name is Zaid Admani, and today is Tuesday, June 3rd. In today's episode, we'll break down Meta's deal with a nuclear power company to power all their AI data centers. We'll also tell you about Hims' acquisition of a European health company. Then stick around to the end of the show to find out how many users Temu lost in May. We got a great show for you today. Let's go. Stocks got off to a solid start this week. The S&P 500 was up 0.4% and the NASDAQ was up 0.7%. Monday was another one of those days where the market started off in the red. In fact, the S&P was down 0.8% at one point, but then it rallied in the afternoon to finish in the green. I think we're kind of in a weird spot right now because trade tensions are starting to bubble up again. Trump just doubled tariffs on steel and aluminum over the weekend from 25% to 50%, which has the European Union pretty upset, and they might retaliate. And then over in China, their Ministry of Commerce said the White House had severely undermined the agreement the two countries had just put together in Geneva a couple weeks ago. So trade tensions are starting to boil again. President Trump and Chinese President Xi Jinping are expected to talk sometime this week. So maybe that'll cool things off, or it could maybe make it worse. We'll have to see. Also, remember, the original 90-day tariff pause on the reciprocal tariffs is expected to expire on July 9th. So that's coming up pretty fast too. But the thing is, investors seem to be ignoring the trade tensions and they keep buying the dip. In fact, the S&P and NASDAQ are both within 4% of all-time highs. Investors seem to be fully convinced the taco trade is in full play and Trump is ultimately going to back down from tariffs. And look, I'm not complaining, okay? It's great to see my portfolio in the green every time I open up the public app, but I kind of have my guard up, It's like having a 13-point lead in the fourth quarter with 2.5 minutes to play. Like, you want to celebrate, but you also just not quite yet. So yeah, it's shaping up to be a pretty interesting summer. Let's run through some headlines. And we're starting with Meta again. Meta is signing a 20-year nuclear energy deal with Constellation Energy. Constellation Energy is the largest nuclear operator in the US, and Meta is buying 1.1 gigawatts of electricity starting in 2027. That's the equivalent of powering 800,000 homes and pretty much the entire output from Constellation's reactor site in Clinton, Illinois. This is Meta's first ever nuclear power deal, and similar to other big tech companies that have done a similar deal, they need this energy to power artificial intelligence. Now, we know that AI needs a ton of data. Well, it also requires a ton of electricity, and nuclear offers consistent carbon-free power. And Meta might not be done because back in December, they put a call out for proposals to secure up to 4 gigawatts of nuclear energy from new US reactors. By the way, this deal also gives new life to the Clinton plant. It was scheduled to be shut down in 2027, but Meta's money will help Constellation apply for federal relicensing and invest in upgrades that could boost output. There's even talks of building a second reactor on the site, which already has federal approval. So yeah, it looks like AI has revitalized the investments in nuclear energy, and Constellation has become the go-to supplier for that. Remember, last year they sold all of their 3 Mile Island output to Microsoft. And all these deals with tech companies has been a major boost for Constellation's stock price. The stock is up more than 40% over the last 12 months, and it's up another 10% this morning in reaction to this news. If you want to learn more about the stock, check out ticker symbol CEG on the public app. Speaking of a company that's having a big year, let's talk about the telehealth company Hims & Hers. They just announced plans to acquire Zava, which is a digital health platform in Europe. This move will give Hims a much bigger footprint in the UK, where they first launched back in 2021, and it officially brings Hims to Germany, France, and Ireland for the first time. Zava already has 1.3 million active customers, and so by acquiring them, Hims is growing their active customer base by about 50%. And as I mentioned a second ago, this stock has been on an absolute heater. It's up 135% since April 22nd. And this rally really kicked into gear after Hims signed a deal with Novo Nordisk to sell their weight loss drug Wegovy through their platform. And the reason that was a big deal was because before that, Hims was selling compound versions of weight loss meds, basically like a generic copycat. But a federal judge recently ruled that compounding pharmacies couldn't keep selling Wegovy knockoffs. So now they're just selling the official thing. And they're trying to become the go-to platform for everything ranging from weight loss to ED to hair loss. So that's why investors are excited about the company, and they're excited about this acquisition of Zava. Hims shares were up 6% this morning on this news at the time of this recording. And I have to say that because Hims stocks moves like crazy throughout the day. So by the time you listen to this, it might be up 20% or down 5%. Let's talk about some stocks making moves today. The discount retailer Dollar General is in the green this morning after topping earnings estimates and raising their full-year sales forecasts. Same-store sales in Q1 jumped 2.4%, well above the 1.4% that analysts were expecting. Now, Dollar General does have exposure to tariffs on their Chinese imports, but the company told investors that it's got a game plan to cushion the blow. Now, the company did warn that low-income shoppers are pulling back on some spending due to inflation trends, but discount retailers like Dollar General have historically held up pretty well during economic slowdowns. So Dollar General, a big winner this morning. The stock is up more than 10% today at the time of this recording. Now, on the flip side, shares of NIO are slipping after the Chinese EV maker missed both revenue and earnings estimates for the quarter. The company said they delivered more than 42,000 vehicles. That's up 40% from a year ago, but I guess investors were hoping for even stronger growth. Shares of NIO are down more than 3% this morning at the time of this recording. I remember a time like 2 years ago where NIO was like the hottest stock in the world. I feel like BYD just kind of stole all their thunder. Let's wrap the show with a fun fact. Temu is getting cooked these days. According to Sensor Tower, the Chinese discount e-commerce app saw its daily US users drop 58% in May. And their app is now ranked outside of the top 100 in the App Store. And that's pretty wild since Temu was the most downloaded app in 2023 and 2024 here in the US. Now, a big reason for the drop in users is the end of the de minimis loophole. The Trump administration closed that loophole earlier this year, which allowed packages under $800 to enter into the US without having to pay any tariffs. So because of that loophole, Temu didn't have to pay tariffs on pretty much any of the stuff they shipped to the US. But now that the loophole is gone, Temu has to pay tariffs, which is forcing them to raise prices. And suddenly, their items don't look so cheap compared to Walmart and Amazon. The company's already starting to cut ad spending in the US, and they're tweaking their fulfillment model to try to make the business model work. But if these tariffs stick around, Temu's days of being a real threat to US retailers like Walmart and Amazon might be over. I've never been a big Temu guy myself, but especially now, because if Temu isn't that much cheaper than Amazon, I'd rather just order on Amazon and get my item in 1 or 2 days instead of waiting 1 or 2 weeks or months sometimes. But yeah, let me know in the comments, are you guys still using Temu? Because a lot of people I know pretty much aren't using it anymore. Well, all right, guys, that's the rundown for today. Hope you guys enjoyed today's episode. If you did and you have like 12 extra seconds, consider leaving us a 5-star rating on Apple, Spotify, wherever you listen to your podcast. And if you do listen on Spotify, don't forget to vote in today's Spotify poll. Leave us a comment on Spotify. All that engagement really does help us out, and it helps other people find the show. Thank you guys again for listening. Shout out to Mike and Connor for all the help behind the scenes. And we'll see you guys back here tomorrow.